Hi all, this is the 2017 question 1 and I'm going to go through part 7 of it right now. Provide for depreciation on buildings at a rate of 2% of cost per annum, and then it was decided to revalue the buildings at 800,000. So I'm going to do the first part first and then go on to the revaluation then. So provide for depreciation on buildings. Well, from the work that we've already done, we have buildings at cost 680,000. So to provide for depreciation on that, we're going to get 2% of 680,000. So again, 2% of cost. Doing that with the calculator. That's 13,600. So our depreciation is going to go up by 13,600. And to balance that then, that's our accumulated depreciation. Our annual depreciation, which is an expense, and it goes under the heading administration expenses, will be 13,600 bigger. This would be the only figure really in here. Okay, that's the first part of it. Then the second part is, it was decided then to revalue the buildings at 800,000 at the end of the year, on the last day of the year. So 800,000. Currently, the buildings are at 680. To bring them up to 800, the cost of them, we have to increase this by 120. So the first thing we're going to do is add on 120,000 so that that totals 800,000. That's the first thing. The second thing then is, when we revalue, we always set the depreciation back to 0. And I'm going to do this in two parts. Since the depreciation currently is this plus this, I'm going to minus 85,000 to get rid of the first figure, and then minus 13,600 to get rid of the second figure. So if we added all of that up now, we'd get 0 depreciation. And to balance that, so originally we had our books were balanced, we had the 120 here, we had the 13.6 here and the 13.6 over here. Now we're not balanced again because we just put in these three figures here. And what's going to balance those three figures is our revaluation reserve. And down in the revaluation reserve here, we're going to put in the 120 that we increased the cost of buildings by, plus we're going to add the 85,000 from up here and the 13,600 from here. So plus 85,000 and plus 13,600. And we're putting them as pluses here and minuses up here. So if we were to, I suppose, double check or see the effect it has on our balance sheet, we would see that increasing the cost here will increase the top part of our balance sheet by 120,000. Reducing the depreciation will also increase our balance at the top of our balance sheet. So altogether, the top part of our balance sheet is going to go up by 120 and 85 and 13,600. And by putting all three of them in here in the revaluation reserve, the bottom part of our balance sheet is going to go up by the same amount, those three figures added together.